Warren Buffett's recent letter to shareholders highlighted he's parting ways with one of the most well-known accounting metrics, book value. Here to tell us why and how ETFs are affected is Tom Psarofagis of Bloomberg Intelligence. First, Tom, why is he parting ways with book value?
Sure, and I think this is really interesting because he's one of the biggest advocates for value investing, right? And book value is sort of like one of the biggest metrics used for that. So just in essence, what book value does is it looks at the difference between assets and liabilities, compare it to what the stock price is, and sort of determine if a stock is cheap or not. He's saying we shouldn't use book value anymore. And one of the shortcomings with book value is it doesn't pick up on some of the intangible assets. And you sort of look at some of the biggest companies today, there's a lot of brand value, right? A lot of intangibles that don't necessarily get picked up in book value. So he really thinks it's sort of disconnected a little bit from the economic realities.
Relate to me why this is important to the ETF universe.
Sure, so let's tie it back to ETFs. Now, value ETFs are actually by far the biggest smart beta category. So, that hasn't, even though value's been underperforming, it hasn't stopped investors from piling into value. But given how important this metric has always been historically, if you buy a value ETF, there is a good, almost positively going to have book value in the metric, right? So about $189 billion of assets have book value in the metric. So someone who's looking to not have book value in a value ETF is actually going to be hard finding that.
So if I don't want book value, if I decide, okay, Warren has a point,
yeah.
Where do I look?
Sure, so there's only a few. There's only about 4 in the universe. I'm going to throw one out there, QVal, which is one by Alpha Architect. It looks at enterprise value. So basically saying if we want to get away from book value, there's other ways to do it, and there's a few ETFs that you can do that with.